Hello, welcome back to part 2 of our series titled How to Make Passive Income with Vacation Homes and Rentals. Financing is one of the biggest hurdles in real estate investing. How much do you need to put down? What are the best loan options? And how do you get approved? In today's episode, we're breaking down the best mortgage and financing options for vacation rental investors. But before we get started, subscribe so you don't miss the next episode where we'll talk about how to pick the perfect property. All right, guys, we're just going to jump right into it. Let's start off with financing and mortgage options. So you found your investment rental property and you're trying to get pre-approved and you're asking yourself, what types of loans are available for purchasing a second home or investment property? And that's a great question. We get it all the time because, again, like we touched on earlier, you have so much more options on the open market if you work with a lender, a wholesale broker, someone like Marsh Lending in terms of what they can offer besides your bank. And really what you're looking at something more often than not, 90% of the ones that we do, they put them in an LLC, right? So, or they put them in some sort of business title, and they keep it out of their personal name, and they do that for a lot of reasons. A lot of the other loans that they do is once they have it and they want to put it in an LLC, okay, let's say they're self-employed, right? So if I'm self-employed or I am a non-traditional W-2 earner, right? So I'm some sort of 1099 or, I might be in private practices like a lawyer or a doctor or, even like professional athletes or any kind of non-W-2 earner, then you can look at options of just using my bank statements, keeping my personal information out of it, just using my business that I want to put this LLC in, right? And those are kind of things that really open up the space as opposed to just walking in and saying, hey, Mr. Banker, I know we have our primary home, conventional 30-year mortgage with you, but we want to buy an investment home. What do you have, right? And you really need to have a good rapport with a lender that has like all of those options available to them, right? And that's really where you want to start. You want to start with how do you want to put it, and then also what are those loan options? Is it a bank statement only loan? Is it a P&L loan off of my business? Is it a DSCR where I'm using the rental income, right? So all of those things help the investor get into the market. One of the other things that we always have to understand is the down payment. It's different than a primary home, right? So a primary home, your down payment is structured to be very small, and then you can have a loan for the rest. In the business loan or an investment home loan, you're really kind of starting at 20%. Yes, there are availables at like 15%, but those are kind of hard to get into, and there's a lot of rules around it, and it isn't always your best option, right? Because they come with higher interest rates, that kind of stuff. But 20% gets you in the game, and then really you kind of go down from there. 25% really kind of gets you into a lot more options, especially it'll help you with like your interest rates because you're putting more, quote unquote skin in the game. So, and then I don't know, Boog, jump in anytime that, if you've got, different ideas on loans and stuff that you guys have done.
No, I think you're exactly right. First of all, for a new investor, they have to understand it's a totally different world. When you're financing for your primary residence where you live, then there's the traditional home mortgage people that are out there, your local bank. Those are great options. They understand all the different products that are available to you. When you talk about an investment property, that's a totally different world. A traditional home mortgage person, they don't really want to touch that. A lot of your local banking relationships, they don't want to touch that. That's not what they do.
Too risky.
It's just not what they do. They're business bankers. They'll help you finance a business or obviously the home mortgage and savings accounts and all those things. They're great at that. But when you want to say, hey, I want to do this investment property down on the beach, they're like, that's foreign to them. So you have to reach out to there's professionals like yourself that's what you do. And but it is a different world. The 30-year mortgage and the 5 and 10% down payment, that doesn't work in that world. That's for your home. And there's great products that are backed by the government, to help you finance a home. Government doesn't care about investment property, they're not going to help you, and they're not putting products out there for you. So it's a different world, and you're right. The rule of thumb for us is we're always looking at trying to get 80% financing. Now, if there's a product out there that's so much better, if we come up with 25% in a down payment, and that product is going to be so much better, and what I mean by better product, less of a fee on the front end, a little bit better interest rate, then it's worth it. Again, most people are concerned about a cash-on-cash return, which means they want to put the least amount of a down payment down. That's natural. But sometimes when you do that, you give up a really good product on the back end, getting a lower interest rate and paying a half of a point of fee instead of 2 points of a fee on them. And you deal with that all the time.
Yeah, exactly. All right. So next question is, what's the difference between financing a primary residence versus a vacation home or a rental property? Now, I think we've touched on some of that, but I would say a key difference is, and it's also when you go through the closing process, but you really have to determine and you have to declare, is this going to be your primary residence, right? And if it's owner occupied, and what we mean by that, it is your home, right? It isn't like like something that you're trying to buy on a government-backed home or a backed loan, and then you're renting it out, right? Because you're not staying there. You're calling it your primary residence, but it isn't really. So we really kind of coach a lot of people on this, because this is a key point that they don't understand. They're like, well, I went into my bank and my bank said that they could do this, this, and this for me, but you have to say, well, are you running it as a business? Are you closing it in an LLC? Are you doing a short-term rental? Because they'll run all those audits on Airbnb and VRBO, and they'll look at it and they'll say, hey, wait, this says it's your primary residence. However, you're renting it out. So kind of come in and talk to us, and what's the story here, because that can get you into a lot of hot water. So we really kind of coach our people through that in terms of, just like what we said, there's a lot of differences between good and bad of, what loan products are available for your primary home, and then if you're doing it as a second home, a vacation home, and or something that you want to rent out as an investment home, that is a totally different animal, and you have to, make sure you set yourself up for success and get the right loan.
Yeah, I couldn't agree more. I've unfortunately had to deal with some situations where maybe something got portrayed as owner occupied. And what also people have to understand from a management perspective is, if that happens and then there needs to be some additional conversations with the lender, I can't just shut all the reservations off immediately, so on and so forth. There's a process that goes along with that, and then it creates a lot of, I guess, headaches, so to speak, to try to navigate in an environment like that. So definitely don't do that, and that's just going to make it hard on absolutely everybody.
Yeah, again, you set yourself up at the start the right way, you're going to end and be very happy. All right, so last one. Are there special loan products for self-employed individuals and those with complex financial situations? This is definitely where you want to seek out a wholesale lender or some sort of broker or a lending company that has these products available, as opposed to just going straight to a bank, let's say, right?
Absolutely.
Because if you do have a complex financial situation, now we've set a closing date, we've put a contract in, we're now kind of bound to that, we're looking for management company, and we get into something, and then you start the underwriting process, and then it's, punt, hey, we can't do this, because of it. And then now that puts a squeeze on the investor. And the investor has to then scramble to us, and it's kind of like a rescue situation for us. We're like working with you, saying, okay, you've already started to try and rent this, or you're getting ready to get pictures, and you're scheduling all the things you need to do. And then we have a closing date that's coming up, and I'm like, okay, we got to get this thing, back on track and close for these people in 2 weeks, right? And that's a hard process to jump into. It causes a lot of frustration. So if you know that you have a complex financial situation, or you're self-employed, or you have some sort of extra income that you want to add in, that's either, possibly gig work or service work or royalties or something else, or you want to use the rental income from the property itself, you definitely want to start with products or loan officers that will help you with that.
Absolutely. Like for a real estate agent, it's so important that I have in my back pocket someone like you that can do loans of this caliber, because it is completely different than even a family just buying a second home. That is a very different product than a true investment loan. And so for us, having, for agents, having people that understand it and can actually pull it off and salvage deals a lot of times it's so key. We have to have that.
Thanks for watching. Financing is a huge part of real estate investing, and now you have a solid foundation to move forward with confidence. If you're enjoying the series, hit the subscribe button and turn on notifications so you don't miss next week's episode on how to choose the right property for maximum returns. Trust me, you don't want to miss that.